Hi everyone, Dawn with the Bookkeeper here. Um, this video is about why we do not commingle funds. It is about something called piercing the corporate veil. Now, if you like my videos, if you appreciate the things that I'm saying in them, if this is helpful to you, please like and share. If you would like to hire me to do your bookkeeping, I would love to work with you. Please feel free to message me below or to send me a private message. I do look at them, I do answer them. I would love to hear from you, or you can comment below. Again, I would love to hear from you, and if there's any, constructive criticism, I'm all about that. If you have an accountant working for you, you've probably heard this. Don't spend, that's not how it goes. Don't make business expenditures from your personal account. Don't make personal expenditures from your business account. There's a reason for that. We're not just being mean. Here's the reason. The government gives us several different business structures. Everything from a sole proprietorship to a C corporation. And you can use any of these structures to set up your business. There's a lot of tax reasons to set them up, but the number one reason to set them up as anything but a sole proprietorship is to create a separation between you and your business. That way, if for any reason someone decides to sue your business, you don't lose your personal belongings. Let me explain to you kind of how that works. Let's say John Doe owns an LLC, or limited liability corporation. One of his employees makes a mistake, and just because I've been working a lot with auto repair shops, I'm going to say they forget to put oil back in the car after an oil change. The car explodes, burns up, and this has happened not with any of my clients. My clients are great, but I have seen it happen with some of the big chain oil change places. They forgot to put the oil back in. The engine seizes, the car burns up, whatever happens, that customer comes back and they sue the business. They can't sue Joe specifically, personally, because he's not the business. So his house is safe. His personal vehicle is safe. He can actually, the business can handle all of that separately. And maybe he decides to liquidate that business and go start another one. However, if he's just a sole proprietorship, that disgruntled customer can sue the business, they can sue Joe, they can sue Joe's wife, they can basically take everything that they ever hoped to earn. So, this is not to scare you, but it is to really hammer this in. You set up your business as an LLC or an S Corp or a C Corp. I hope it was one of those three. I don't recommend sole proprietorships. You set this up not just for the tax breaks, but to protect yourself and your family in case, just in case. So, how do you make sure, how does the judge, if this ever comes to trial, the judge is going to look at your accounting and they're going to say, yes, they treated this business like a business. This is a legitimate business. There's no personal expenditures being made out of the business. Therefore, there's a veil. Lawyers call it the corporate veil. It means that basically this is what makes you and your business completely separate entities. Now, you can take money out of your business. You're completely entitled to do that. But this is where I really get after my clients, that if you want to take money out of the business, go ahead and make the transfer for $1,000 or $500 or how much you think it's going to be. Don't just use your business card or your debit card for the business to make personal purchases. Because when you start doing that, then if this ever happens, the judge will go back and they'll look back 7 years. So if you can't go, it's never going to happen 7 years in the future. But the judge will look at that, and it could be any sort of dispute, by the way. I've watched some very intelligent, astute business people make this mistake because they just got into a dispute with one of their partners. And if you've ever worked with me, I don't do disputes. I will either walk away or I will argue with you, but I don't like court, and so I don't go to court if I can help it. Not for myself. So the judge is going to look at this, and it's even worse if there's multiple entities involved. Okay, the judge wants to make sure that entity A, that this business entity that is set up is a real business entity, that it's not an ATM for the owner. They want to make sure that these accounting rules are being followed. If the business owner is kind of using the business like his personal ATM, and that doesn't mean you can't take money out of the business. It means that if you think you're going to spend $500 of the business money, you make a draw of $500 to yourself and spend it out of your personal account. Because the judge is going to go back and he's going to go, huh, well, I notice that you spent money, you spent $5,000 on a hot tub for your house. That has nothing to do with your business. So the corporate veil is pierced. This business entity does not actually exist. You are treating the business as it's part of yourself. Therefore, the plaintiff can come after your personal things that you personally own. This is not something that you want to have happen. Not even remotely. You do not want the judge to come back and say, oh yeah, we're going to let them sue. We're going to let them take your house. We're going to let them do all of this. This is a bad thing. And this is why your accountant will completely flip if they go, your spouse is spending money at Nordstrom for personal things using the business card. We will flip, because part of our job is not just to count the money, it is to protect you. And when we know that you are doing things that are going to hurt you in the long run, it's my professional duty to speak up and say, don't do that. And because hopefully you're being accountable to me as your business, as your bookkeeper, as your accountant, it becomes very important to me because I care deeply about all of my clients. If I have someone who's working with me, I want them to do well. I want their business to succeed. I do not want to find out later that they did not follow my advice and therefore they went under and they lost everything. I don't ever want to hear that happen. So I feel like it's my duty as a professional to warn my clients when I start to see them do these things. So if you're my client and I come to you and I say, your spouse is spending money at Nordstrom, make her stop, it's because I'm trying to make sure that the corporate veil is not pierced. So that your business entities are doing the things that they are supposed to be doing, which is to protect you. It's kind of a rant, huh? So that's why we get so frustrated with commingling. And I am going to address commingling again, what it is. This is why you don't do it. Listen to your accountant. Again, if you would like to hire me to watch out for your business, if you would like to find out how to find out where you're at, if you would like help taking care of your accounting, please feel free to message me below, or you can email me at donna@mysimplebookkeeping.com. I would love to hear from you, and I will be back soon.